All right, joining me is Mr. Archit Singhal from Mumbai. He's a portfolio manager at Centrum Broking. Mr. Singhal, welcome to DD India News Hour. The Indian stock market indices hitting record highs. What do you read into it?
Yeah, hi. Thanks for inviting me.
Welcome.
So, yeah, outlook for Indian economy is positive. The Indian economy is growing well. The economy can grow in double digits, you can say, for the next few years. And valuations are also reasonable. They have gone up slightly in the last 1.5 months. But in context of the growth which economy is delivering and in context of the profit growth which Nifty companies are delivering, I think we are still okay. One has to be selective in terms of stock picking at this stage. Yeah, so that would be the thing. One should be looking at the combination of growth and valuations when seeing in this market.
Now, as we speak, Mr. Singhal, some people are wondering, is it or could it have been a Santa Claus rally given that the festive season is upon us, or are there more systemic, fundamental reasons for the indices rising to their all-time high levels?
Yeah, so I think it would be a combination of both the things. So there are, you can say, structural positives. So if you look at Nifty profit growth, it has been growing at more than 20% CAGR for the last 3 years. Even this year, I think we should be at 20% plus CAGR in terms of growth. So one of the structural factors is that growth has been good. Margin improvement has been happening across various companies because raw material prices have cooled off. And along with that, if you add the global cues, so Brent, which was a concern for inflation, has cooled off. Now we are at $75 Brent versus $90 in the month of October. And also US 10-year bond yields have cooled off, which is now leading to some FII positive flows. We had positive state election results as well. So, I mean, there are a couple of factors which are driving this rally. Yeah.
At the same time, the 10-year yield in the US has crashed to 4%. Now, will it trigger large capital flows to India?
So there is a possibility that flows can come into emerging markets, and India again is a good growth destination. We have not seen any major FII inflows for the last few years. We saw some good inflows in the last few months, and you are seeing now Nifty is about 21,000. So yeah, I mean, to answer your question, I think we should be seeing more FII flows into the country going forward.
And talking about India, any particular sectors to watch out for?
So, I mean, financials is one of the sectors where growth is good. We are in a credit upcycle. NPAs have come down for most of these companies. And valuations are reasonable. So that is an attractive sector, especially if FI buying returns to India.
All right, we'll leave it at that. Archit Singhal in Mumbai, thank you. Appreciate it.
Thank you for your time.